Well, hello everyone, it's Shooter. Welcome to Weekend Box Scores. Please review our disclosures at the end of this presentation. Now, I left Tesla both in the primary waves and swing trade notes because swing trade notes was a shallower trade. And if that trade holds to the upside, then, obviously it will become a position trade, which is why Tesla is in primary wave. And, our primary wave 3 extends to 339. So as long as our trend support holds here, I see no reason that doesn't manifest, and that's our look. Now I've got our long stop right now at 241.70, fairly tight. However, if you want to scale in, if it breaks below that, I'm not opposed to that because I think a lot's going to be positive for Tesla, what's going on. The new Model 3 or Model Y is it that, is supposed to come out in China. Then let's look at NTR, Nutrient LTD, nice base. It's held up, scale in if you haven't. Intermediate wave 3 comes in around 86.98 with a back test of about 77.51. So KK holding up really, still the best looking chart this week. Looking for that 77. I expect it to be chopping around, but, as far as the look, I think once the market's turn in the right direction, we head that way. Now, Amazon's potentially a decent little bottom here. Keep a tight stop, though. If it goes below that 123.04, which is basically a primary breakout, I would cut to half or less and wait and see what happens because this could extend. If you look where our support is, we got a little support right here at the 200-day. Then from there, we got a little support down here at 102, but we really don't have any real support until this 23.6 fib back at 92 if we do break down. So just keep that in mind when you're looking, but it does look to me like it's got some decent upside. Now, my single hesitation with Amazon is the weakness in consumer spending, credit cards getting maxed out and savings account being exhausted. And also the timeline here for the rollover debt on the commercials. We're looking at the FANGs or the Magnificent Seven or the larger U.S. corporations. A lot of their debt's not going to roll over till mid-2024 to early 2025. So a lot of what we're seeing in the debt problem, the rollover, and even with Amentus going to Chicago to secure some new financing, that's just indicative of how difficult financing is going to be and how they're going to be looking at rolling over debt. And unfortunately, I think Amazon is one of the children that could be harmed from this. But we've also had a decent drawdown here from our peak here. Not quite 10%, but a nice figure to the downside, and a little divergence. We've never really gone down to a 30 RSI. This is a tad bit lower, so that to a certain degree on the daily, that is a confirmed low on this low, but still the count's giving me to the upside. So I'm going to give it the benefit of the doubt and give it a shot, but scale in with a little less size than I normally would, to the upside. But that's my view on all entries long right now. My bias is still that this directional trend that we're in is not over. So whether or not we get a blow off top between now and then, I don't know at this point. That would actually be conviction to the lower side, downside for me if that does occur. But looking at Intel, we've held our own. Now looking for that 41. Now I would probably sell some covered calls around 43, 44, 45 once we get up there, because I don't think there's going to be really we're diverging already. This is not confirmed, but we got some divergence in this push already. So 4 could be fairly deep, and that could become an ending diagonal, which would be broader. So it could come down maybe to the 50 days. So maybe you want to insulate on Intel on the upside once we get up to that 42 range. Now, looking at Oxy, I think we do get a breakout here. We're coiling nicely. We're going to put in 3 a little shallow to the 77. Other things, XOP and XLE both look a little bearish right now at the moment for me. So like I've said many times, I think Oxy is a longer-term position trade, and ultimately, I do think it breaks out to the upside. If we get higher oil and we do hit my $100 a barrel by the end of the first quarter, obviously, I think it'll be reflective in the price here. However, I will say this, is that XOM has done much better in correlation to the price of oil than Oxy has. So just keep that in mind when you enter that position. Now, as far as the SPY is concerned, at that 440, I would think taking some puts there would be prudent. Now, whether or not you're holding your covered calls through this mess, of course, is your business. And, Apple, I think we break down here. I don't think we hold up. I don't think we get a bounce up. So maybe I would roll out of, depending on how many contracts you have, maybe roll out of the covered calls and roll into some puts. I would target, maybe about 160, 165, stay shallow on those, roughly 5 weeks out, see how those work, or come in a little closer, go to 168, 169. $2 is usually very profitable with Apple, just giving you the hindsight there. So we get above that 173.17, then I get a little hesitant. We might get a little bit more of a bounce. Our speed line would be way the heck up here around the 8-day at about 180 or 65. Now taking a look at Microsoft, same look, maybe a push to 328. And then our target ultimately is down at 272. Now, this is a better candidate to hold covered calls than Apple, just because I think Apple just breaks down the way the chart looks. Microsoft will break down, but not to the extreme. There's just a substantial difference in the degree of the drawdown based on price. So, we're not looking at a 20% drawdown on Microsoft, but we could be looking at a 20% drawdown on Apple. Now, of course, that's going to weigh on markets to the downside. And that's what I pretty much have this week for the primary wave, folks. Great trading. Until next time.